And Prasar Bharati correspondent Vinod Kumar joins us now from Dubai with more. Vinod, with oil prices still volatile and over $110 a barrel, what signals are you picking up about India's ability to secure stable crude supplies in the weeks ahead?
Well, Mark, with oil prices surging this $110 mark due to the escalating conflict in West Asia, disruptions and the disruption of the Strait of Hormuz, India is deploying, I would say, a shield and diversify strategy. The government primary goal is to prevent a massive inflationary spike before it hits the average consumer. India can manage in multiple ways. One is absorbing the shock. Over the past couple of years, when the oil prices were really subdued, we had collected so much of profits, and these profits can be used as a shield and a buffer so that the inflationary spikes will not be passed to the customer. And while this protects the customer, it is a massive financial burden, I must say. Every $10 increases in oil prices is estimated to add around 14 to $16 billion to India's annual import bill. We also have a really good strategic reserves and inventory. Around 250 million barrels of crude oil and other finished crude oil products are stored in India in various places like Vishakhapatnam, Mangalore, Padur, and we also have stock in commercial tanks and other reserves. And these emergency reserves and stocks allow the government to wait out the short-term volatility without having to scramble for expensive spot
Right.
market oil during the peak of the crisis. And this war and the closure of Strait of Hormuz, we have been preparing for quite some time. This is not a unanticipated event. Our preparations lasted decades. That's why we have diversified our sourcing of oil from various parts of the world. Now only 30% of India's oil comes from the Strait of Hormuz, and 70% of India's crude oil now arrives through routes unaffected by the current naval blockades. And we have sources in United States, West Africa, Central Asia, and many other places. And the most important thing is the Russian factor. Russia still remains India's largest supplier. Despite the sanctions, India secured a 30-day waiver from the United States to importing Russian crude, and uh, uh, and this will definitely bolster up India's
Right.
reserves as well as India's sourcing ability. Despite these protections, a $10 110 price tag is putting will put a heavy pressure on Indian economy, and in India have a very long diplomatic arm. Hopefully,
Okay.
in the short term, this volatility will ease and the oil prices will come back to the normal levels.
Indeed, hopefully it's just a short-term crisis. But how is the Gulf assessing the immediate impact of volatility in its markets?
Oh, the Gulf has a completely different game here. And the reaction to the current oil price suggests a complex mix of operational alarm and tactical redirection. Usually, when the prices go high, that should bolster their regional treasuries. But here the issue is different. Here the issue is of accessibility. The supply side paralysis means producers cannot fully capitalize the rising rally because 200 odd ships are now closed at Hormuz Strait, and major exporters like Saudi Arabia, UAE are facing storage crisis. Iraq, Kuwait, and UAE already began cutting production. And earlier today, Qatar LNG and Bahrain, Babco, have institutionalized force majeure clause in their legal paradigm. That means they are not able to deliver already paid for oil and crude oil to the
Right.
to the world. And domestically, governments are also moving to shield their own economies from the volatility. Dubai, for example, has maintained pre-conflict fuel prices cap for March to prevent local inflationary spikes. And Gulf at this moment is shifting from a wait and see approach to active crisis management. And their focus is on liquidity, where to prevent panic selling in their stock exchanges. Dubai has made
Yes.
unprecedented interventions, like this, trading has been halted, dividends dividends distribution has been stopped, and cash reserves is being bolstered. And this impact is definitely hitting different sectors in the Gulf, especially Dubai, which is the major hub for tourism and aviation. So yes,
Right.
at this current moment, this is unprecedented, and the situation is being handled tactically.
Thank you very much, DV Vinod Kumar, for giving us a status check of the situation from the Gulf.